Morning, guys. Welcome to the daily market wrap for Tuesday, the 11th of August. The Middle East conflict continues, and Jack, both the US and Iran are seeking reparations from each other as a result of the conflict.
Yep.
Are we seeing any changes in the market on the back of this outside of oil, or is it just oil as usual?
What we've been seeing is oil rising, obviously, but we've also been seeing US equities stall, which we'll get in a second. But the rising tension is not from any escalating strikes or physical attacks. It's more the market was expecting some sort of resolution to be found, whether it's a new ceasefire deal, opening up the Strait of Hormuz or other shipping channels, and that just hasn't happened yet. Both sides are still posturing in negotiations, trying to seek a better deal from one another. And even the Iran-Oman deal that was going to open up some shipping lanes, that's still yet to come to fruition. So it's more a pause in any progress rather than any escalating conflict. But this prolonged tension is what's raising oil.
All right, and so as you mentioned, the US equities on the back of that risk just kind of remaining have backed off a little bit over the past few days.
Yeah, so last week, the three big US indexes, the Dow Jones, the S&P 500 and the NASDAQ 100, all had their biggest weekly gains since April. So all had really strong weeks, again, from this AI-driven rally and boom we've been seeing. But all three of them yesterday retreated slightly. It wasn't a big drop, but it was definitely a cooling of that upwards momentum, and that's directly attributed to this Middle East conflict.
Okay. And the jobs data that came out on Friday last week, some big impacts there across the board?
Yeah, so we saw the US non-farm payrolls published on Friday, obviously one of the biggest economic data points that we see on the economic calendar. We're expecting to see 80,000 new jobs added in the US, but what happened was there was actually a contraction of around 25,000 jobs. So there was less jobs in the economy, more people left the workforce, which has really put the brakes on any potential Fed rate hike next month. So there was about a 57% chance of a hike next month. That's now dropped down to only 44%. And that's really put a lot of pressure on the US dollar, which weakened significantly on the back of that news.
And announcements today, so the RBA rate decision. Most analysts expecting this to hold at 4.35%.
Yeah, while the Middle East is still bubbling away, there's got to be inflationary pressure, which is the key thing the RBA is looking at the moment. So everyone's expecting a 4.35% hold. Obviously, any deviation from that is where we'll see big movements in the Aussie dollar. But also if Governor Michelle Bullock's messaging around inflation changes, whether she starts pulling back from how severe the inflationary pressures are, that might weaken the dollar. Conversely, if she sort of strengthens her language around that and is more concerned with what inflation might impact the economy moving forward, then we see the likelihood of rate hikes moving forward increase, which will boost up the Aussie dollar.
And the past 24 hours, obviously you touched on oil, back up to around 88, which it hasn't been at for a number of weeks.
Yeah, it was getting quite low the last couple of weeks, and now it's firmly on the rise, and we can see a big uptick even with no renewed conflicts or escalating conflicts. It just shows how optimistic the market was, and that they're starting to get a little bit concerned of no progress being made towards this deal.
And the pound yen, this is one we don't talk about particularly often. What are the main drivers behind this one?
Yeah, this one's more the yen story. So we've been mentioning yen intervention for a few weeks now, and we saw recently the US and Tokyo combine to support the yen and buy up the yen and try and strengthen that currency, which really brought the yen price higher, and the USD yen pair, that price came down, obviously. But what we've been seeing recently is the yen is starting to weaken again. So markets are just starting to buy the yen continuing. So even though there was a lot of yen buying and support from those two countries, this hasn't really changed the fundamental drivers of why the yen was weak in the first place. which is the big rate differential, which is driving the carry trade. The yen's got a very low interest rate, so people will borrow the yen to pay a low interest rate and then invest that into high yielding assets or currencies. Like they'll just buy the US dollar, which has got a 3.5% interest rate. So that 2.5% interest rate difference is basically what they can capture by doing these carry trades, which is why the yen is so weak and why the price will continue to rise even after the intervention.
And silver back up to around 65, been trending up for the last couple of days.
Yeah, so gold and silver are sort of trading similarly as they normally do. So gold's up as well. Gold had its best week since January. So it seems the momentum's starting to shift on that a bit. And again, this pulls back to the weak US non-farm payrolls data on Friday, which weakened the dollar unexpectedly. And as gold's a non-yielding asset, a weak dollar really helps boost this price. So gold and silver are doing well. Copper's also near all-time highs, so it's the precious metals have got a bit of momentum behind them now.
And some large volatility changes. Ethereum, we touched on a couple of weeks ago with a similar move. What's the driver behind this one?
To be honest, I ran out a little bit of time to check out the key driver for it. It is surprising given we talk about the US non-farm payrolls weakening the dollar. You might have expected to see a bit of crypto buying. But what we've been seeing with Bitcoin and Ethereum lately is these big holders, the big whales, they're moving these markets. So it's likely that one of these big holders of Ethereum was exiting a position yesterday, which was a big driver of the market.
And the euro dollar, normally quite a well-behaved currency pair, doesn't tend to move around too much. We see a big rise, back in the end of July and continuing up over the past couple of weeks.
Yeah, we can see there was basically a 5-week consolidation where it was pretty range bound, bouncing up and down in a pretty tight range. And what we can see, it's broken out of that range and it's now got a bullish channel that it's working through. And so as long as it now fits within that bullish channel, it'll keep rising up. And as we've been talking about, these upper and lower bounds of these ranges act as support and resistance. And where you see the big moves is where the price breaks out of those channels and importantly holds out of those channels. So it'll keep bouncing between them and testing those levels. But as soon as it breaks out and holds, that's where we see these big moves. So for the moment, again, on the weak dollar and the euro holding pretty firm, we're seeing a bullish rise at the moment, and we'll wait and see what happens. We've got US inflation data coming out this week, which could impact this as well.
And an article of the day around gold. What's this one about?
Yeah, just looking at gold's recent uplift and some of the key drivers behind that. Like I mentioned, gold had its best week since January. So if you want to look into that a little bit more, this article will paint you a bit of a picture on that.
Yeah, obviously a very popular traded product, so worth having a quick read to get familiar with it. Any question? Yes, Cara.
Do you think that gold will head back up to the around 5,000 mark that it was at last year?
I think it's got, that's $1 million question. I think it's got every potential to. I think the reasoning for that original move are probably still there. I mean, the big fly in the ointment is the Middle East stuff. And I think until we've got a permanent or permanent looking solution towards that, it's got to struggle to get there. And what we see with the new Fed regime that's come in and what they're doing with the US dollar will also have a big effect. So they're probably the two big impediments to the rise for the time being. But I think the fundamental backdrop of central banks increasing their gold holdings over the last couple of years is still there. I know the People's Bank of China have recently increased their gold storage capabilities to sort of buy up a bit more. So those positive drivers are still there, but there's still the headwinds of the geopolitical tensions and what the new Fed will treat the dollar with. And if they go on Trump's regime to try and lower interest rates, that'll be gold supportive. Or if they're worried about inflation, that'll sort of be a resistance for gold.
Yeah, I certainly think it'd be interesting if it got back to those levels at the same sort of speed that it did last time. Thanks.
Has there been like a noticeable uptick in volume at all with the movements of gold in the last week? Or?
Yeah, for sure. I mean, anytime any highly traded symbol has a large move, we see a massive spike in volume. Obviously, gold's a super popular product. Clients like its volatility, likes it moves, plenty of opportunities to trade. So, yeah, always see a pretty big uptick when we have those sorts of moves.